What should you do regarding the potential doubling of capital gains taxes and increased corporate taxes if you're an S corp?
No one knows ultimately what Congress is going to support at the end, but I think the consensus is it's going in the wrong direction for most of our clients. So maybe taking a step back for those of you who don't have their arms around sort of taxation of captives, there's some tremendous advantages relative to the tax code for insurance companies. We do a lot of work in what's called the micro captive space, or the captives that make the 831B election. And so what winds up happening is, for our clients who make that election, the premiums that are funded into this insurance company, all the premium income revenue is non-taxable. The entity can grow with minimal taxes. It's only really taxed on the investment growth, which we can generally manage. And then on the back end, if you do dissolve this entity, which by law has to be a C corporation, then you're afforded long-term capital gains tax treatment. So that's certainly one consideration and advantage that our clients look to. And so with the proposed increase in capital gains tax, we do field a fair amount of questions these days about, does it still give us the same advantage from a tax perspective as it used to? A lot of times people think immediately, well, if I don't need my captive, I'm just going to shut it down. I'm going to dissolve it, and therefore I've got this tax burden. We've seen our clients do a couple of different things that are creative in their ability to manage some of their tax exposure. One option is to decommission your insurance company. So what that means is you're going back to the regulators and saying, we no longer want to operate as an insurance entity. We have no lingering tail risks. Here's our financials. We want to hand back the license. They approve a decommission, and now what you have is a C corporation with some retained earnings, but you haven't dissolved this corporate entity, so there's no immediate taxable event per se. So what we've seen our clients do is they have the opportunity to potentially repurpose the C corp into another operating company and sort of kick the tax can down the road. Conversely, what they're able to do is maybe have it be a personal holding corporation. And we're not CPAs, we're not tax counsel. There's definitely clients who have opted for that path, and there is a tax burden on your operating income as a personal holding corporation, but they found it to not be so onerous as just making a liquidation and pay immediate capital gains taxes on that basis. So again, we don't know where we're going to wind up relative to the Biden tax proposals, but there's definitely opportunities to not have to take the brunt of the tax in one fell swoop. I'll end my comments with one thing. Normally our clients have pretty sophisticated tax counsel, and so even if they felt like they wanted to dissolve the entity and create this taxable event, there's all sorts of creative other offsetting strategies that you can use personally to hedge against those taxes, whether it be charitable type of planning or otherwise, to sort of eliminate or reduce those tax burdens. Wes, Jared, anything to add?
As I talk to clients, I say historically capital gains have been lower than ordinary income, and I believe that will ultimately hold true. I'm also old enough and young enough at the same time to have seen tax changes many times. I mean, whether it's estate taxes, capital gains taxes. I remember under Bush, it was 15%, and then it went up to 28%, and then it came back down to 21%. And so, you have to look at this thing over. The test of a good decision is the test of time. And at 50 years old, let's say I live to 100. That means there will be 12 presidential elections. There will be 24 congressional elections between now and then. So I believe firmly that tax rates will go up, and then they can come back down, and then they'll go back up. So to me, it's holding steady with the stuff you have. And then when there's different tax changes, then you pivot at that point.
I mean, I remember that when it was going from 15 to 20 and, people were wondering if it's still feasible. Does it still make sense? And the ones who, turns out now 20 looks great in context, A, and then B, 12, 13, 14 years on, their captive's doing, 15 different things for them to help their business. And, that little conversation seems like an afterthought. So that's well said.